Hello traders, in the last video we promised to make a new video on how to be flexible and clearly understand how and when to change your strategy. Let's finally figure this out. So when to change a strategy? One of the mistakes of beginners and even experienced traders is an attempt to trade the favorite strategy for most time and throughout all stages of the market. In some period, your favorite strategy brings a very good result, in the next not so, and in the next one only losses. If it's still accompanied by tilt, emotional trading, as the trader's psychology resists the reality, trying to return the losses. All the previous results go down the drain. As a result, a rather long period of time of struggle with the market turns into the fact that all your previous success was crossed out by one attempt to beat the market that stretched for months. There is no need to fight the market. The market is always right. You just need to do what it dictates. So unfortunately, it's also impossible to directly determine the change in the market phase. However, there is indirect method and very effective one to determine this. And your trader's diary is the answer. Provided that you work on strictly following your trading system according to your risk management and so on, and commenting every trade in the diary. This is extremely important assumption. The diary will show you the market phase that has changed. For example, we are working with the breakouts. There are no good breakouts, a lot of systematic stop losses, and we open finally the diary. We look at this, subject to following the trading system. Of course, we have 20 trades per week, all the breakouts from a certain sample, and more than 60% are systematic stop losses. And the average PNL is reduced. These are the main signs, the main reasons that something is going wrong. What are we doing next? The next task is to eliminate the psychological and human factor. We reduce the volumes as much as possible to the very minimum and continue to trade all the same. Further, there are two scenarios. If at the same time the statistics has leveled off, psychology was the reason. You have reached an uncomfortable volume, you trade with uncomfortable volume, you have become more doubtful about your trades, a difficult life situation, and many other reasons. That's it, it's not about the market. You can gradually then increase the volumes, the working volumes, to the previous ones. You just needed a break in this case. Another scenario. The statistics are just as unfavorable. We have eliminated the psychological factor, which means that something has changed in the market indeed. In this case, the task is to leave this strategy for a time, change it to a spare one, but with minimal volume, because this is a transition from one strategy to another. And first we should check, does it work on the current stage of the market? We'll look at the statistics, not at the profit we get. Good win rate, good statistics, increase the volumes, and assign this strategy as the main one for the current stage of the market. What conclusion can we make? Unfortunately, we feel the change of the market stage only on our losses, on our diary. And our task is to make the price of this as low as possible, which is why we reduce volumes and continue to work on statistics for verification. Always reduce your volumes when something goes wrong and after changing the strategy, just to check if it works or not. That's it, friends. Therefore, the art of trading is patience. A person who made a fortune on breakouts during the bullish market is not yet a trader, but a person who maintains the same profitability in different stages of market is a professional. who is able to be flexible and to feel the market like a living being and adjust. The method told to you in this video is one of the most working and most effective. However, it requires patience. But if you manage to apply it, be sure you will become a pro trader. Thank you for your attention. The video was prepared by the CSCALP Trading Terminal team.